Hi, my name is Celeste Smith with RE/MAX Associates, and this is John Thomas, my lender partner, with this week's update.
Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of April 21st, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Hope you had a great Easter this past weekend, but was not a great week last week for mortgage rates. Delaware mortgage rates did spike higher last Friday. If you look at the bond chart on the screen, you can see that red candle down on Friday. Basically, bonds sold off on better than expected stock market and better than expected economic news. And if you look there, we've been drifting lower all week and tried to find a bottom Wednesday and Thursday, but then when the economic news came out on Friday, stock market rallied, pulled money out of the bonds, they sold off. Now, we are going to recommend cautiously floating your Delaware mortgage rate to start the week because we are sitting right above the 200-day moving average, which is the level of support for the bonds. We're hoping we can bounce off that and move higher after this big sell-off. So we do recommend floating your Delaware mortgage rate to start the week. Now, if we dig into some of the reports that came out last week, the first big one, the Labor Department reported that the March Consumer Price Index, the CPI, rose by 0.2% versus the 0.1% expected. CPI measures inflation at the consumer level, and it jumped 1.5% year over year. That's hotter than expected, and that comes on the heels of the Producer Price Index the previous week, which is a measure of wholesale inflation, also spiking higher. Now, this is just 1 month, but the Feds are going to carefully watch this inflation, because if inflation starts kicking in, they may have to raise the Fed funds rate, which has been keeping interest rates relatively low. Then we had the weekly initial jobless claims released on Thursday. It moved up 2,000 claims to 304,000 claims for the week. Not a big deal. Still at a 7-year low in terms of claims, but we would really like to get this below 300,000 and get people back to work. Federal Chairwoman Janet Yellen, who took over for Ben Bernanke, also stated after the claims came out that a healthy and robust job market is more than 2 years away. So even the Feds are saying we're not going to be out of this labor market problem for at least 2 years. In housing news, the Commerce Department issued the housing starts for March 2014, which came in at 946,000 housing starts. It's up 3% from the previous month, but it's still below expectations of 950,000 starts. Now, housing starts is a measure of how many new homes builders started that month. So this report does show some underlying weakness in the new home construction market. Following up report to that was building permits for March 2014. That declined by 2.4% to 990,000, which also shows weakness in the home market. So building permits measures how many new permits builder applied for to build new homes. So that going down shows future construction will be down. So we're going to have to follow that as we get into the spring market. Hopefully those numbers will rebound for April. Then the National Association of Home Builders released their housing market index for April 2014. It came out worse than expected at 47. The March index was revised lower from 47 to 46. So this shows the index is down from the high of 58 in August 2013, but we're still way higher than the 15 reading we had back in 2009. All right, in the local news, the next free first-time homebuyer seminar is Saturday, May 17th. That's in Newark, Delaware from 10 a.m. to noon at the Christiana Hilton Hotel.